Have you ever looked at the stock market and just felt, well, overwhelmed? Like it's this swirling vortex of numbers, headlines, unpredictable moves. Makes absolutely no sense sometimes, right? What if I told you there's a method developed almost a century ago that claims to find a profound mathematical order woven into all that apparent chaos? Today, we're taking a deep dive into the W.D. Gann Master Stock Market course. It's legendary, often kind of mysterious work by one of Wall Street's most enigmatic figures. And this isn't just about stocks, is it? It's more like a grander worldview where everything, market movements, natural cycles, it's all connected by these exact mathematical proportions.
That's exactly it. Our sources today are direct excerpts from Gann's original Master Stock Market course and also some supplemental questions about the denser parts of his content. We've really tried to distill his core principles, the charting techniques, and his unique philosophical underpinnings. Basically give you a shortcut, a clear, concise understanding of this truly fascinating, almost mystical way of looking at markets.
Right. Our mission is to pull out the most important nuggets of knowledge, those insights that give you genuine aha moments. We want to offer a clearer perspective on this unique way of seeing markets, challenging conventional wisdom a bit without getting totally lost in the weeds. So yeah, let's unpack this. Okay, so the very foundation of Gann's philosophy is this, well, pretty radical idea. Success in speculation isn't about gut feelings. It's not flashes of insight. It's about pure, unadulterated knowledge. He really believed that sustained success came from hard work, rigorous, deep study, not gambling. You simply had to be, as he put it, well posted, truly understand your business. Guesswork. That was just a guaranteed path to ruin for him.
That's absolutely right. And he really drove home the danger of letting emotion dictate your trading decisions. Gann explicitly warned, didn't he, that trading on hope or fear would ruin you. Hope, he argued, well, it's just wishful thinking, offers no logical basis for making a trade. But fear, interestingly, could actually be your saving grace if you acted quickly when you realized you were wrong. He even had that powerful phrase for it, the fear of the market is the beginning of wisdom. It's a stark reminder, you know. Objective knowledge, painstakingly acquired, that's your only reliable guide.
Yeah, it sounds like he wanted traders to strip away all human fallibility, essentially. And to really embody that, Gann pushed for what he called machine-like action. He believed you had to develop a set of rules and then follow them meticulously, like a machine. Regardless of your personal feelings, what you think or what you hope might happen, this unwavering, almost rigid adherence to a method, he felt, would consistently beat any human guesswork that's just tainted by emotion.
Mm-hmm. And to even begin to grasp his method, you first need to understand the three factors he saw as most critical: time, price, and volume. And among these, he famously declared that the time factor will overbalance both space, which he used for price, and volume. Time was the ultimate driver for him, more powerful even than the price move itself or the amount of trading.
Right, and this is where it gets really foundational for Gann, because he saw time and price as intrinsically linked, like two sides of the same coin almost. He taught that significant market moves up or down, they only really begin after sufficient time has expired. This core concept, squaring time with price, it's absolutely central to his whole approach. So for instance, if a stock hits a major bottom at, say, a price of 25, Gann would say, okay, now watch for major trend changes around 25 days later or 25 weeks or even 25 months from that point. That's when he believed time and price come into balance, creating these powerful potential turning points.
Exactly. And volume, for Gann, that acts as the crucial confirmation for these time and price signals. He observed that volume typically picks up when a stock starts moving up from low levels, signaling what he called accumulation by, the smart money. And conversely, when you see significant activity, heavy volume on the downside after a period of quiet trading at high levels, that indicates distribution. Informed players are selling off, so volume provides that third dimension, confirming the underlying strength or weakness that time and price are suggesting.
Okay, so with those fundamentals, time, price, volume, the next logical step is how did Gann actually visualize this stuff? How did he work with it on a chart? He used some pretty unique geometric tools. Angles were absolutely paramount for him. He stated flat out that the 45-degree angle, representing that perfectly balanced move of 1 unit of price but 1 unit of time, whether that's a day, week, or month, is the first and always most important. He saw this angle as representing a market in a healthy, balanced trend. As long as a stock stays above it, suggests upward momentum, but breaking below it, that often signaled a fundamental shift, underlying weakness. And he didn't stop there. He also highlighted other strong angles like 2x1, 4x1, 8x1, even 16x1, and 3x1, each showing different sharper rates of climb or fall.
He certainly did, and this is where his work gets, incredibly intricate. He developed what he called his master charts. These weren't just simple graphs, they were highly specialized geometric tools designed to map these complex relationships, like the square of 9, for example. It was this spiral grid he used to connect price movements to specific angular divisions. He was essentially mapping market action onto a precise geometric pattern. The key takeaway isn't maybe the exact calculation for us now, but that he saw these recurring numerical relationships governing market turns. It's fascinating. Similarly, the Master 12 chart was a 12 by 12 grid used for measuring time periods, days, weeks, months. The square of 52 linked price and time to 7-day cycles, relating to that important 7-year market rhythm he observed. And then there was the hexagon chart. That helped him visualize how angles influence stocks at different price levels, explaining why moves might accelerate higher up, basically. The distances between the angles widen, offering less resistance as price expands outwards.
Building on that geometry, Gann also figured out key resistance levels.
Oh,
How did he do that? Well, he'd take the entire range of a big move from the extreme high to the extreme low and divide it into 8 equal parts. These 18th points, he saw them as natural buying and selling zones. He also really pointed out that halfway points, the 50% retracement levels of both major and minor moves, were often crucial turning points, almost like magnetic centers.
and sometimes stocks don't hit these levels perfectly on the nose, right? Gann had a concept for that too, which he called lost motion. He observed that just due to momentum, a stock might slightly over or undershoot a key resistance or support level, usually by about 178 points, he thought. But he had this great analogy for it. He said a stock might behave like a ball dropped through the Earth's center. It might oscillate a bit, but eventually it settles on the exact center. It's a vivid way to think about how markets tend to return to and consolidate around these precise mathematical points after maybe an initial overshoot.
Wow. It's incredible how many layers of cycles Gann was tracking simultaneously. That must have required immense discipline, just a huge amount of data keeping. Did he ever talk about how a typical trader could realistically keep up with all this without getting completely overwhelmed? It sounds like more than a full-time job just to maintain the charts.
Oh, he absolutely emphasized the need for diligent record keeping. It was a full-time commitment to study, no doubt. But he did layer these observations into these multi-layered time cycles, which helped make the task a bit more systematic, I suppose. For the major cycles, he looked at these colossal periods like the 60-year great cycle, along with 30-year, 20-year, which he noted most stocks seem to follow most closely, 15-year, which he saw as half a circle, or 180 degrees and 10-year cycles. These are the really grand long-term rhythms.
And he didn't stop at the big picture, did he? He also saw the importance of shorter cycles playing out within those larger ones.
Precisely. He looked at shorter rhythms too, like the 7-year cycle that's 84 months and the 5-year cycle, which he actually called the smallest complete cycle in a market. There were even smaller 3-year and 2-year cycles he watched. And then on a much shorter time frame, he taught that the daily charts give you the very first signs of short-term change, typically lasting maybe 7 to 10 days. Weekly charts would then indicate the next important shifts, running maybe 3 to 7 weeks. And the monthly charts, they reveal the strongest, most significant trend changes, lasting 2 to 3 months or even longer. He believed these all nested inside each other.
It's amazing. He even tied these market cycles to seasonal rhythms, almost like the earth breathing influencing the markets. Gann found that stocks often made important bottoms and tops around specific seasonal dates, things aligning with the solstices and equinoxes. For example, in the winter quarter, he'd meticulously watch December 22nd, January 5th or 6th right at the start of the year, and January 20th or 21st as potential key turning points. And then there were also what he called mid-season dates, May 5th, August 5th, November 8th, February 4th, specific dates he flagged.
Yeah, and beyond just the fixed points on the calendar, Gunn also noted that individual stocks often tend to make changes around their own key anniversary dates, like the company's incorporation date. He observed, for instance, that U.S. Steel frequently saw important trend shifts in February and March, which correlated with its founding period. And then he identified specific time periods measured from any important top or bottom, like 30, 60, 90, 120 days, all the way up to 360 days or degrees. He saw these as representing divisions of a circle in time, and they were crucial windows for potential trend changes.
Okay, so with all these really complex observations about time, price, volume, geometry, cycles, how did Gann actually translate this into, practical, actionable trading strategies? Where do you even start applying all this?
Well, he really emphasized stock selection and group analysis. Gann clearly understood that markets have cross-currents, meaning some stocks or sectors can be declining while others are actually advancing strongly. So you needed to meticulously study not just individual stocks, but entire industry groups to identify the leaders. He gave that example of aircraft stocks back in 1953-54. They were the big leaders breaking out to new highs, showing where the real momentum was. It wasn't just about picking any stock. It was about finding the right stock in the right group at the right time.
And he had some pretty strong opinions about which stocks not to pick, too, didn't he?
He certainly did. He gave very strong advice against low-priced stocks, often calling them cats and dogs. He felt these stocks often just tie up your capital for long periods, you lose patience, and they might never actually make a significant move. Instead, he recommended focusing on higher-priced stocks, especially after they've broken out into new high ground and show significant volume and activity. He believed these were the ones the big institutional players preferred, offering better potential for real moves.
So it's really about following the strengths, following the money. And Gann had these very clear, almost mechanical rules for when to actually buy and sell. He taught, basically, buy at new high prices, or when prices advance convincingly above old low levels. Conversely, you sell when prices decline below old top levels, or at new low price levels. He did advise waiting for maybe 1 to 2 points of confirmation, particularly looking at closing prices, just to ensure the break was genuine, not a fake out. And he famously said, didn't he, it takes nerve to buy at new highs, but that is what big people do. He used examples like Boeing aircraft, showing how buying those new highs in 1554 led to quick, substantial profits. It's counterintuitive for a lot of people, but absolutely central to his strategy.
Hmm. And he also had a very disciplined approach to pyramiding. Incrementally adding to your winning positions as the market moves further in your favor. But Gann advised doing this only in active markets, ones with above normal volume, and only after a stock was already in a clearly strong or weak position according to his angles. You'd typically start adding after, say, a 5-point move in your favor, and crucially, you'd limit the risk on both the original trade and the pyramid to no more than 3 points each. It's about letting winners run, yes, but always, always with strict risk controls in place.
Now, speaking of protecting capital, stop-loss orders were just non-negotiable for Gann, weren't they?
Right.
Absolutely crucial. He insisted you should never use a stop-loss order more than 3 points away on your initial trades, and his core risk management rule. Divide your capital into 10 equal parts and never risk more than 10% on any single trade. Sounds simple, but it's a discipline so many traders even today struggle with.
Absolutely. And to keep all of this organized, to really embody that knowledge philosophy he preached, Gunn stressed the absolute necessity of meticulously keeping up multiple charts. Yearly, monthly, weekly, even 3-day high and low charts. He considered the monthly chart the most important chart of all in determining the main trend, giving you the big picture context. But he acknowledged the daily chart gives the first short-term warning signs, alerting you to immediate shifts. His system really demanded dedication to charting.
But Gann's insights went way beyond just numbers and charts on a page, and this is where his worldview gets really fascinating, I think. He drew these remarkable analogies between market cycles and, well, even the human body. He noted there were 7 openings in the head, which led him to his law of 3, and the mouth being the 7th opening, where everything goes down, maybe linking that somehow to market downturns.
Mm-hmm.
He also observed 5 fingers on each hand, relating that to 10-year cycles, and the 3 divisions of the fingers. He saw these as further proof of these underlying mathematical structures governing not just markets, but life itself. It's pretty out there.
It is quite striking, isn't it? And his integration of biblical references, too. Gann saw profound significance in certain biblical numbers, like the children of Israel marching 7 times around Jericho's walls before they fell, and how 7 times 7 equals 49 days or 7 weeks often marked important turning points in markets, in his view. He frequently cited numbers like 40, 70, and 81, believing they held keys to understanding these cyclical patterns, almost like a divine blueprint for the universe.
Ultimately, all these diverse observations, from the intricate geometry of his charts to the rhythms of the human body, even ancient texts, they all fed into Gann's overarching belief. That belief that everything in existence is based on exact proportion and perfect relation. He fundamentally believed there is no chance in nature, because mathematical principles of the highest order lie at the foundation of all things. He saw the markets not as random chaos, but as a reflection of this profound mathematical order that's present throughout the entire universe.
Yeah, what really stands out, I think, from this deep dive is just how comprehensively Gann viewed the markets. Not random at all, but operating on this profound mathematical order woven right into the fabric of time and nature itself. It was such a holistic, almost spiritual approach to what seems like a very technical field.
Absolutely. Whether you're a seasoned trader listening to this or just, insanely curious about the hidden forces that might shape our world, Gann's work really challenges you to think differently, to look for those hidden structures, the patterns in what often just appears as noise, as chaos. His ultimate goal, as he stated it, was really to help others. To quote him, to throw a single ray of light across the darkened pathway of another. It really makes you wonder, doesn't it? If the markets, the seasons, maybe even our own bodies are all governed by these deep hidden mathematical cycles, what other profound patterns are we missing? Right there in plain sight, patterns that could unlock a deeper understanding in, well, maybe every aspect of our lives.